learned how important honeymoon was in so much that it really taught people. So happy to be here with you today and a very important video to present as we're talking about, are the bears about to take control? Now I have some bears lurking in the background. They're just lurking in so much as that this could be setting up a pivotal point. We have obviously here 10-year starting to really tick up towards the top of the coil. After, don't forget, liquidity grab down over here. A breakout above this, what could cause that? A breakout above this is something that could completely derail the markets and send risk into a tailspin. Oil is really what the 10-year is tracking off of. And you can see that right now, futures are pricing in $107 a barrel of light crude, light sweet crude. We're going to get the light sweet crude flowing. Guys, the markets right now are at a very, very critical juncture where we could see a turn, a massive turn. We have a couple of things that are happening. Number one, and this is critical for what happens, I've pointed this out as a marker, as a signpost. If at any point in time we were to see a pullback on capex spending is what is driving the markets. And if we were to see a pullback on that, that's one thing that could definitely derail the markets. Now, we're going to come back to that and hit up a point that Dogged Nation brought up about what the capex spending might be aiding into. So we'll talk about that view as well. The second thing, we have a spike in 10-year. That's something that could derail the markets. That's tracking the price of oil. And the price of oil right now is at an inflection point where it could go from bad to worse. It looks like that right now, the negotiations are getting pretty intense. Now, this is my read on what is happening. By the way, Jay Powell taking the mic today at 2:30 p.m. Eastern time. 2 p.m. Eastern time, Fed's decision. They're going to be on hold. Then we're going to hear the hawkish Powell. He's going to come in and look to one last jab into Trump, come off as hawkish as possible. As he leaves, try to make things as difficult as possible. It's not really that important right now. What's important is what happens with this negotiation that's taking place between Iran and the White House. And right now, Trump's stance is the blockade is the most leverage he has. And he's hoping that the situation, as far as the way that Iran's oil is set up, is that if it's not flowing, if they're not continue to if they run out of storage, that they could be damaged on that's long term, they could never get back to the production that they have now. There would be massive consequences. That's what he's betting on. Iran is betting on that they could outlast Trump. Midterms are coming. They're saying the U.S. is out of ammunitions, and largely that's true. That's why you could even over here prepare for a short wave of strikes on Iran. A short wave, notice. And, maybe they're going to, right now, what I see is Trump going in as hard as he could with the leverage he has, hoping that within the days ahead, that there's an actual resolution where he could lift the blockade, open up the Strait of Hormuz, and walk away with the concession that Iran says they're not going to pursue any type of nuclear weapons. That, like, he's pushing as hard as he can right now, because if it doesn't get it, this goes from bad to worse. And I don't know what Iran's position is or what Iran is going to do. And I do feel like, yeah, likely that's true. The clock is ticking. The clock is ticking on them having to open up the strait. However, I don't know. They are fighting over their sovereignty. I don't know what they're going to do. And that is why we're looking here today at the price of oil once again testing its highs. And if this is not resolved, The clock is literally ticking now, and the bears are lurking. And if this is not resolved, we're going to be seeing oil over 120 at least. And the macro consequences are going to be absolutely dire. Kev was saying we want to get into some macro sessions, some long conversations. It's difficult right now with these pieces, these unknowns that we have, right? It like critical is what happens with the price of oil. That is going to dictate what happens here with inflation expectations and the 10-year. Those are two things that could derail the whole macro view and actually make it full-blown bear market ahead. Another thing that could happen is that, yeah, we see today that we have top line earnings beats across the board, no problem. But as people start looking under the hood, they're like, Meta obviously has eaten their war chest, and that's going to be a concern if we see other companies taking the path that Meta has taken. Now, one thing that Doggy Nation brought up, I think is really great. Let me just go ahead and hit on it. Let me hit on it. And he was showing, look, as we stand here in 2026, corporate buybacks is probably one of the largest factors that continue to help the equity markets march up in a tremendous bull market. And they have increased this year more than ever in 2026. As you look forward, though, to 2027, the question that needs to be asked is the risk of all this AI capex spending going to eat into then for the buybacks. For example, if Alphabet is spending, I'm making numbers up, if they're spending $65 billion next year on AI capex spending, and do they have to pull back on their share buybacks, right? And the share buybacks is absolute financial engineering. It's one of the major forces in the markets today. And if that pulls back, what's going to happen to the share prices? He also points out that we have mega IPO supply coming. We know SpaceX is about to launch the largest IPO ever. And then on the heels of, and by the way, what happens after SpaceX launches, right? Obviously, well, not obviously, I would imagine before the shareholder unlock, prices, opening day shooting up aggressively. And then what happens going forward 6 months later when long-term holders are able to sell? Talk about facing reality. Probably what's going to happen to the markets as SpaceX winds up becoming automatically entering into the S&P 500, taking up who knows what weight in that. Then you have obviously Anthropic. Obviously, well, nothing's obvious. What am I talking about? This is nothing obvious about what's going on. You have Anthropic looking to hopefully IPO by the end of the year. ChatGPT would like to. They need the liquidity. I don't know if they're going to be able to or not. Is these IPOs signaling top of the market? I don't know. The real question, though, is whether this AI capex turns from a growth investment into a free cash flow drain. We've seen this happening already on Meta, and whether or not the market then begins to discount these shares because of that. We are at an inflection point. I mean, could it go the other way around? Could it go that, listen, you could look at it a different way. And you could say, wait a second. Do you guys remember when the war broke out in Iran? And then shortly thereafter, we saw the Ukrainians targeting Russian refineries. You have to ask yourself why, or I asked myself why, and I've asked you why. And you said, well, of course, this is their chance to attack. Why weren't they attacking them sooner? But if Washington wants lower and needs lower energy prices, why would the Ukrainians, who Washington is helping, their greatest benefactor, why would they then target something that's going to raise the price of oil. Unless maybe that's what Washington is trying to do. Maybe actually that the reason that they went for Iran and the reason that they went to go ahead and targeting the Strait actually, game playing out that the Iranians would have no choice but to close it. And then you could see the refineries, I think there were 7 worldwide in the past, call it 30 to 60 days, that have come under fire. Is this to raise the price of energy and put more pressure on the Europeans and on the Chinese? Are they looking for the flows to be directed towards the Gulf of, what do you call it? My wife's Mexican, so I call it the Gulf of Mexico or the Gulf of America, to Texas. And you know, are is this like something that benefits the US energy producers, and do they believe that the consumer is going to be able to absorb these higher energy prices in this what is so far a resilient economy? Was this to put pressure on the Chinese and the Europeans? It could be, and I believe it looks to me that Trump he's like getting desperate. He's like trying everything he can. He's like, I met with my counsel and be prepared for a long-term blockade. Really? We're preparing for a short wave of strikes. No more Mr. Nice Guy. You better get smart. I mean, he seems desperate to come to an end, and we might see that. The Iranians also might be desperate, and then we might have, by the time the market opens up on Monday, a resolution to this. And if that happens, yeah, likely, even though it's going to take months at this point for any type of flows to resume, and longer for them to be able to put Qatar to be able to put back their LNG, take a couple of years. That's going through the US right now. That's not going to stop right now. That gives the United States a massive bargaining position over the Europeans. And if this doesn't get better, and the clock is now ticking, there's no, we're talking by the market open on Monday. If this thing escalates and we see oil above 120, I don't know that this is something that we're going to be able to walk back from. We got the bears are lurking. The bears are lurking. Watch it. Remember, I told you I'm watching the weekly. If we saw a bearish engulfing on the weekly here off of the highs over here, if we wound up taking out these lows, that's bad news, bears. That's bad. It's not a time to hope. There's no question about it. That's time to really get concerned. Again, oil over 120. NASDAQ here, fading, bearish engulfing on the weekly. Bad. What would Bitcoin be doing? Bitcoin right now is in a hold your breath type situation. It is so far it's at a massive pivotal point. Do you think we have a sell impulse triggered? It's very difficult to say. You could look over here and say, oh, that's a sell impulse triggered. If we dig in under the hood a little bit, I would have to say, well, yes, it is. No, it's not. And that was us, your fault for sleeping on the. Anyway, here's definitely the first time that structure had the opportunity to show any weakness and breaking down, and its secondary is confirmed over here, although I don't give that line much weight, but it is still above the downward sloping breakout that has been going on here since the top. And those, as we've seen, they usually hold. You guys remember what happened? We'll come back to that in 1 second. Do you remember what happened over here? I know you all remember what happened over here, so let me bring it up. And then we had this massive, look at this. Here was the breakout, retest, and then regional bank crisis held. There was nothing easy about it, and there never is, but it did hold. And similar situation now. From the top, down over here, but you can see that instead of the opportunity for this to push much deeper, we're at a make or break it moment coming up. And that's why I want to dig in. And yes, this would have been good TA. Wasn't really paying attention. The secondary one, I don't give as much credence to, but this line right over here, this is the line in the sand. And trading under that, that then brings up, bears will likely be very much in control if that is transpiring. Now, could we get another new high and then come back in and test lower later, like we just looked at what happened in March 2023? Sure, anything could happen. I mean, the structure wouldn't be broken. The breakout trend line wouldn't be broken if that were to happen. Yeah, I mean, they also got dollar swap lines opened up to them. Besson's like, we're entrenching dollar dominance by doing that, and yeah, do you think that to get those swap lines like maybe they were told like, listen, you got to leave the OPEC? Could be. Head and shoulders. Oof. Or let's revert this. When in doubt, invert. Oh my gosh. That's so bearish looking. But guess what that means? That's pretty dang bullish. Now that's really bearish looking to me. Is it to you? That's really bearish looking. Breakdown retest underway. Now, yep, of course, if it's faded, we all know what happens. It's neutral, but the trend is completely bearish. So it's down, and then we know what happens if we break out over here. That's it. That's very clear roadmap. Very clear roadmap of what's taking place. I like it like that. I'm going to keep it up inverted for 1 minute. The tiny one on the breakout. Wow, I buy. There's the neckline. You're flirting with the neckline right now. I like that inverted though. It gives me good perspective of where we are and the importance of what's ahead. And so, how far away are we from strategy beginning to stack again on STRC? Are we a couple of weeks away? It's going to be hitting. That's a dynamic that should not be understated. And strategy is swiping billions and billions of dollars of Bitcoin off the market. Eventually, that's going to catch up. Eventually, that is going to catch up and is going to have enormous ramifications to the upside. Now, when that is, that's another thing. But as it's happening, people will be like, "Oh, it was so obvious." This is pretty major inflection point. The Bitcoin and gold cross right now into heavy resistance. It is make or break. And we got a clean trend line on the daily over here. We're coming into it, and whether or not we're going to get the confirmation of the breakout of Bitcoin versus gold, here we are. What an important. We still have more things happening in the future. Obviously, we got the new Fed chair coming in, and not so important yet. We have the meeting between Z and Trump. That's major. That's major. And depending on what happens from that summit, that is going to allow us then to view the macro in a new lens. Cabby, it's coming. Soon we'll be able to look and have a conversation. But right now, the macro is dependent on what happens today with the Mag 7. It's not that they're going to beat earnings, I imagine. Destroy them, actually. What matters is how the market interprets their current rate of spend, their future rate of spend, and then what it means. And today is probably the most important earnings day of 2026 to date, and probably one of the greatest macro drivers ahead. as yes, the AI build is driving the market. Then we have the price of oil to contend with, which is obviously contributing to the price of the 10-year. These things breaking out from here, breaking up, right? Oil shooting above 120, holding 10-year, therefore is probably going to break. That is something that could completely derail this bull market. We got major hurdles ahead of us. This is probably the most important week of this bull market. So stay tuned. Stay tuned. That's it for this short check-in. All right. I'm going to listen to Powell today. It's his last chance for a mic drop. Hear what he has to say. Hear what clues we get from the central planners about the economy. I think that we got it more dialed in than they do. I'm gonna stick with us. Inflation is transitory. This guy. Anyway, everyone, if you haven't already on your way out, do go ahead, hit that like button. I'll see you all here on the inside. Have a beautiful day, CTM. Tomorrow, I reserve the right, depending on what happens with the earnings today, depending on what's happening with, I don't think the Iran situation is going to be, I think the clock is by the opening, or I shouldn't say on Monday in Asia. I think by then we know what happens. So Mag 7, massive catalyst. But what happens with the US and Iran, I think that we know what this weekend is it. All right, everyone. Lots of love. God bless you. CTM. See you on the inside.